Welcome back, and let's kick off with some of the other requests. Investec Limited. Very interesting here. I mean, the share around October, 29th of September, the share was as low as 67 Rand 50. And I mean, this is a daily chart, a candlestick chart, and just shows you momentum that this share really got behind it. Investors started to get into the share and it rallied almost straight in a line. First of all, momentum is clearly to the upside, so nobody will worry about that. There you are. Look at that beautiful rally to the upside. Nothing wrong with it. What do we see here? I think that we may be sitting here on the developing of a rising wedge. Now, usually a rising wedge is a negative formation. It triggers easily a sell-off. There you are. And what do we see here? Beautiful rally, but this little gravestone doji already gave an early signal that maybe the share rallied too hard. And this was on the 31st of October. I mean, a rally from, let's call it 67 to well above 95 is not too shabby. It's wonderful. And of course, we know it's a good company and there's nothing wrong with it. This share worries me the moment I see that little line there. And this is now for a shorter view. It's not for the long-term view. The long-term view is still 100% in place. Let's just have a look at the long-term view and then you will see that the share is still looking 100% okay. Look at that. I mean, beautiful rally all the way. It also shows you a rising wedge, and that's on a weekly chart. Let's have a look here. And it's quite simple. Maybe we're in the making of also right at the top, a tiny little shooting star or even a gravestone doji. We'll see, because on Friday we will only know. But if we look at this chart, that will be my warning. And that will be the low of that chart, of that candle. And that low is sitting at 91.51. If it breaks below 91.51, first of all, it needs to get to this support line. That support line sits at 88.65, and if 88.65 turns into a resistance, then we know this rising wedge can maybe play out and it can maybe take the share. I think this is a nice support line there. Look at all the shadows around that level. It should reach then for this level, and that's sitting at 81.83. Nice share, nice company. I think we had a strong rally and maybe we do for a little bit of a pullback before we can hit either. But of course, I mean, if we can take the high out of this little candle, and that is sitting at 94.64, we can easily go to 100 Rand because it's such a nice psychological level. Let us look at Ferroglobe, and they listed on the Nasdaq, and it looks like there's a little bit of a double bottom here. It looks like it because it tested this level of $5 a few weeks back. That was in July. And recently it also tested it, but my clue is, look at these little shadows here at the bottom. It tells me there were some buyers around there. But for me, the resistance line is waiting. I'll show you now. There's my resistance. While we're below this line, it means that we're still into a share that's under selling pressure and that the momentum is to the downside. But if I combine these bottoms as well here, I can see a beautiful symmetrical triangle. Now, what is a symmetrical triangle? A symmetrical triangle is usually a pattern that tells you that the investors are still uncertain. They're not 100% sure about the company, but things will change if this resistance line can turn into a support. And remember, this is a weekly chart. And the reason why I'm looking here at the weekly chart, the Nasdaq had a nice rally. We need to see if it can carry on, or we'll probably see maybe a pullback. We never know. But the level there is $6.46. Above $6.46, we can easily see that this symmetrical triangle can break to the upside. Where's my stop loss? My stop loss will be the low of this candle there, $5.35. And where's my target? And that is usually an easy projection. That's the mouth. I usually use the mouth there, and then I just extend it, and maybe we're fortunate to see the share in time to come above $8.82 or at $8.82, only when this resistance line can turn into a support. While this resistance line is a resistance, that means that the momentum to the downward is still 100% in place. always keep in mind, if you do buy for the long term, and if you do nibble above that line, just use the stop loss, and you can always add into the position over the long time. I will never forget Mr. Wayne McCurry once said, he said, if I like a share, let's say for instance, he like a company, he buys it maybe right at the top of $9 and he still believe in the management. I think he don't even use technicals. He looks at the fundamentals and he say, if the share then drops to $5, he'll probably add some more to the portfolio. He will not just sell the share out. Why? Because he still believes in the company and he looks at the fundamentals. Unless something nasty changes and there's maybe something wrong in the company or the fundamentals changes, he will probably add to your position or add to his position. With technical analysis, it may be a little bit different because you don't know the fundamentals. Most of us don't know. We look at the chart or we read something about the share and then we start looking at the chart and then it interests us. So if you do buy there, and you've got your stop loss in place, that is to protect your capital. But if you do see that the share starts to go higher, you can always add to the position and then always lift the price of your stop loss just to protect your capital. Not a bad or a shabby idea. It's a brilliant idea. It will just assist you with investing on the stock exchange using technical analysis. Let's look at Blackberry. I think we've looked at it before on the show, but I cannot remember. But the trend is still 100% to the downside. Let's just have a look here. And I can remember the days when the Blackberry phone came out. I mean, everybody wanted a Blackberry phone. And now some younger generation people don't even know the name Blackberry. What nog the share, the phone. But if you look at the chart, yeah, I mean, the trend is still 100% to the downside. And there you are, you can see the resistance line tells you that the share is still under pressure here. But what I like about this chart is the following. At least we see a falling wedge developing. Now, I always like to buy a share as close as possible to the bottom on the candles because it usually guides me into it. So if I look at the chart here, I say to myself, well, if this resistance line can get tested and maybe break above that, that's at $5.40. And remember, this is a weekly chart. Maybe this share that's been under immense pressure, I mean from $13, well, $12.30 all the way down to $3.90 is a massive sell-off. Then maybe this falling wedge can maybe trigger a nice relief rally. Let's have a look where it can take the share to. My initial target, and this is a tiny first target, I mean, because I use this opening right at the end of the channel. Look at that. It can maybe take the share back to $7.75. Look at it. There was a nice resistance there. It can easily take it back there. Just have a look there. There you are. You can see it. It can easily go back there. But use your stop loss of $3.90 to protect your capital, because this share had some ugly selling, but at least it's starting to show that there is some momentum building up within this falling wedge. And usually, what is a falling wedge? A falling wedge is a formation that usually triggers a relief rally. But when does it do that? Only when this resistance line on a weekly basis can turn into a support, not before then. Before we run out of time, let's have a look at Brent Crude oil. Well, the whole world is telling us that inflation is close to the top and that the interest rates that is coming into place is going to curb inflation and that things will come better for us. So everybody's looking for what we call a soft landing. Can you remember a few weeks ago, I showed this chart and I said, listen, look at this head and shoulder formation pattern. It was a tiny little right shoulder. What happened? I said, well, it can maybe play out to a certain level. Let's see where was the target. And I want to show you something here because everybody is so positive that inflation will come under pressure. It played out to the T. There's the level. It played out almost to the T what we said. We said it can maybe go back to $86 and it exactly did that. So yes, the chart assisted us. And I always like it if a chart conforms to the technicals, because then I know the fundamentals is probably also in place. But what do I see now? And that is making me nervous. I mean, share markets are rejoicing. But what do I see here? And I really hope that I'm wrong. I'm seeing an inverse head and shoulder. Look at that. Now, if this inverse head and shoulder is true, and if the chart conforms to that, look what can happen. There you are. I mean, we've got the left shoulder, we've got the head, we've got the right shoulder, and where's the neckline? The neckline sits at $97. And, I mean, where's the low of this right shoulder? There you are. That is sitting at $91.30. While the Brent oil price remain above this neckline, we can easily see two things happen. First of all, we can see the share go up, or not the share, the instrument, go up to 103, not good for inflation. And if it really plays out in full, where can it go to? Can you believe it? It can maybe go back all the way to $111. So it's quite simple. If oil remains above this $91, the chance for the world to beat inflation is dim. And then the Federal Reserve and other banks needs to rise interest rates even more. So be careful. Maybe inflation is not past us, and it's maybe not topping out, maybe going higher. Let's see. We don't know who's going to be right, but maybe this chart is telling us a nice, interesting story. Well, thank you for watching the show. Visit our website, www.fransdeklerk.com, for more info, and we'll chat again.